Did you know when the Tesla stock split was scheduled to occur? The aforementioned separation has been anticipated by many individual investors. To learn more about this, stay watching and tuning in. The majority of individual investors cannot afford the present price per share of Tesla, despite the fact that many believe the stock is overvalued. Hence, the eagerly awaited Tesla 3-for-1 deal. The value of the stocks remains unchanged, but more individuals will have access to it. These significant Tesla stock split dates are displayed here today, and investors in Tesla stocks should be aware of them. A stock split, what is it? A stock split, according to Forbes, occurs when the board of directors of a firm distributes additional shares of stock to its existing shareholders without decreasing the value of their ownership stakes. A stock split reduces the value of each share individually while increasing the number of shares in circulation. A cosmetic split of the shares may indicate that smaller investors believe they may purchase the stock, despite the fact that their numbers pale in comparison to those of major institutions. Fractional trading is currently available to investors through several brokerages, enabling small investors to purchase a portion of equities that appear to be costly. Splitting stocks doesn't alter a company's worth. For instance, when a corporation with a $100 stock price splits its shares into 2 for $1, its owners will end up with two $50 stocks each. Their previous single share was worth the same as the value of their 2 new shares. However, according to Reuters, which cited research from Bank of America, businesses that divide their stocks frequently do better than the market. This can be the result of investors purchasing stock in a company following a split on the belief that the shares are now more reasonably priced. Stock splits are a common strategy used by companies whose shares have reached exorbitant prices, thousands or even thousands of dollars per share, in an effort to increase accessibility for ordinary investors. A company that splits its stock gives its stockholders new shares at a predetermined ratio. After a stock split, existing shareholders will own more shares, but the price will drop in accordance with the stock split ratio. A stock split, however, has no effect on the total market value of all of the shares. A company may split its stock if it thinks the price of its shares has risen to the point that the typical investor cannot afford them. Recall that earlier this year, in a 14A filing to the SEC, Tesla revealed its intentions to split. Tesla announced that company plans to split its common stock in a 3-for-1 ratio, resulting in a threefold increase in the number of shares available and a 1/3 price split on the split day. This action only makes more common shares of a publicly traded company available while lowering the price to make shares more accessible for investors. It has no effect on the firm's valuation. In that filing, Tesla noted, the primary purpose of the authorized shares amendment is to facilitate a 3-for-1 split of our common stock in the form of a stock dividend. Furthermore, they stated that the current number of authorized shares of our common stock is 2 billion, which is insufficient to effectuate the stock split. As of June 6, 2022, we have 1,036,390,569 shares of outstanding common stock. The authorized shares modification must be approved by stockholders before our board may sanction the split of the shares. They claim that this action will increase the availability of Tesla stock ownership for both investors and employees. It is admirable that this action includes a portion aimed at increasing retail investors' access to the company's shares. The aforementioned statement was made following a 42% decline in the value of the company's shares this year. After hours, Tesla's shares saw a gain of almost 1%, closing at $696.69 on the day of the announcement. Although our employees have benefited greatly from this value appreciation throughout the years, the filing stated that we want to ensure that all employees, regardless of when they join, have access to the same benefits. Our success depends on attracting and retaining excellent talent, and that highly competitive compensation package is offering every employee an option to receive equity. Help Tesla to do that, the business stated in the same filing regarding the planned stock split. We think that by resetting the market price of our common shares, the stock split will give our employees greater freedom to manage their ownership. A proposed 3-for-1 stock split was put to a vote by Tesla shareholders at their most recent meeting, and the proposal was adopted by a large majority of votes, more than 1,815 million shares in favor and only 9 million shares against. By virtue of the vote, Tesla now has 6 billion authorized common shares instead of just 2 billion. According to Tesla, as of June 6, 2022, the company had just over 1 billion common shares outstanding. Following that, the EV firm declared that it will proceed with its 3-for-1 stock split and that the stock dividend would be paid on August 24th. The stock split for all stockholders of record on August 17th will occur on August 24th, according to a press release from Tesla's board. In light of the upcoming stock split, would you be tempted to purchase Tesla shares? Please share your thoughts with us by using the comment area below. In an effort to increase employee and investor access to equity ownership, Tesla stated in a press release that the board of directors had approved and declared a 3-for-1 split of the company's common stock. A dividend of 2 additional shares of common stock for each share owned as of August 17, 2022 will be paid to all stockholders who were on file on that date. The dividend will be dispersed after trading closes on August 24, 2022. On August 25, 2022, trading will start on a stock split adjusted basis. Tesla expressed a desire for a split of its common shares, citing the idea that attracting and keeping top people is the main driving force behind the move. The company claims that it offers every employee the chance to obtain shares, in contrast to other manufacturers. Tesla reports that the price of its shares increased by 43.5% between the date of the proxy statement on June 6, 2022, and its previous April split in August 2020. Though the stock is down about 20% this year due to the broader market sell-off, it has continued to rise after that time. Even with the most recent stock split in August 2020, the top EV manufacturer has seen a more than 200% increase in share price. The announcement of the stock split caused Tesla's price to soar to a record high of $2,000 per share in 2020, when the company's shares were selling for about $1,300. Following the split, the price per share was reset to approximately $460, resulting in a valuation of approximately $430 billion. After the 5-1 split, the stock increased quickly, with Tesla's valuation nearly doubling in the ensuing year. It should be mentioned that Tesla released mixed second quarter results last month, most of which exceeded analyst projections. However, analysts were concerned as the company's production suffered due to continued interruptions in the supply chain and a factory closure in China caused by government lockdowns related to the COVID-19 pandemic. Although it decreased from a record high of $18.7 billion in the previous quarter, which ended the company's run of record profits, Tesla's quarterly revenue of $16.9 billion increased 42% from a year ago. After the earnings release, Wedbush analyst Dan Ives stated, "In summary, the quarter was better than feared with healthy guidance. For the remainder of the year, which undoubtedly appeared doable and error-free. Conversely, analysts at Citi maintain a sell recommendation on the company and predict a price of $424. Believing that Tesla shares are overvalued and could fall by more than 50%, the few other firms that reached a similar market worth did so by generating, on average, roughly $100 billion in annualized gross profit. But Tesla's $20 billion profit in the first half of the year suggests that the present valuation is still difficult." The company notes that the share prices of a number of other significant companies who declared stock splits this year have increased. The stock of Amazon split 20-for-1 split 1 month after Google's parent company Alphabet split 20-for-1 in February. Furthermore, according to Lindsay Bell, chief money and market strategist at Ally, a split could raise the share price by facilitating ownership of the stock by a larger group of investors, even though it has no effect on the fundamentals of the business. A portion of the company is more easily affordable for regular investors when equities are trading in what is known as a comfortable range. This increases interest in the shares, and increased interest in the stock results in additional traders. Check out our channel and other videos for more information about Tesla stocks.